For those who have been paying attention the last couple of weeks to any type of news, you heard about the fact that we had an exceptionally strong job growth report in the first quarter of 2024. But today's conversation isn't specifically about that news because a couple of weeks later, that's already old news. So I'll summarize a few key points, but what I do want to touch on is the negativity around the potential impact in the rate market and why I think most people are wrong about where interest rates could go. But it's obviously all an educated guess. So in today's video, we're going to talk about specifically the impact of the job report on the overall markets, and a week or two later, what we're already seeing happen with some new data and what could come about in the next couple of weeks and months as it relates to the real estate market. So let's get right into it. If you didn't already catch the news about the job reports, Canada added about 90,000 new jobs, which was a big number and more than was expected coming into this quarter. There's a few things you got to think about when it comes to these jobs, specifically speaking the types of jobs that are recorded and more specifically the amount of people that are in our country that aren't getting jobs. Now, statistics show that for the amount of people that are actually getting jobs in Canada, there are more people actually that are coming to our country. And if you haven't already seen the news or statistics, this was recently reported from the United States. There are more jobs or more people working jobs, but less total income or revenue. There were stats that actually showed more people are actually working a second position or a second job than ever historically before. That could be a full-time job and a part-time job, and in some cases, full-time jobs just to make ends meet. And there's reason to believe that this is a common occurrence across the country of Canada. And with conversations of people potentially leaving, or a lot of conversations coming down the pipe of large companies considering not coming into Canada due to the new capital gains tax, these numbers could turn around very quickly. BMO Economics actually reported the numbers specifically. In the last year, there have been 400,000 net new jobs in the same time where Canada's population has grown 1.8 million people. Now, those numbers don't specifically add up, and that causes some level of concern when it comes to thinking about what this overall job count really means as a totality of our economy. At the current rate of population growth, our economy needs to generate 60,000 more jobs to keep up with the current economic growth just right now. With the nature of these most recent job reports, there's a lot of people out there right now who are letting rate cut doubt creep in. And this conversation, as I mentioned, is not so much about the jobs report. It's more of where we are now a week and a half later. But there were a lot of people right away who immediately said, okay, we saw a lot of jobs come in. There's a lot more going on here. We're going to see rate cuts go back from June to July and maybe even September. But a couple of weeks later, there's a few things that I think people were forgetting that are already starting to show. The first is there is this belief that Canada will not separate itself from the US Fed. And with the most recent numbers coming out of the US suggesting that the Fed might not dip rates in December, there's even more and more reason to believe that Canada is going to separate itself. Here's a couple things to consider. Canada's debt service ratio is at a record high right now historically. People are in debt right now. And in addition to that, we're in a place right now where half of Canada's mortgages have not renewed, but they are set to renew towards the end of 24, 25, and 26. This could cause some major debt issues, and for any of those suggesting otherwise, they're completely incorrect as far as where the market could go. Now, the BOC, Tiff, has mentioned publicly on a few occasions he would like to see rates go down slow and steady. And if that's the case, they need to get started lowering rates. Just right now, consumer credit itself is at a 30-year low. And there are reports out there right now that Americans have basically completely run out of their pandemic savings and are starting to dig into their credit. Now, the debt numbers haven't climbed to extreme numbers yet, but they are, and they will. And these are reasons that the Bank of Canada and the US Fed, for that matter, are going to start lowering interest rates sooner than later. Now, there's one big reminder that a lot of people haven't actually paid attention to, or at least I haven't seen enough people talking about, and that's business insolvencies. In the beginning of 2024, there was essentially a crisis. People had to pay back that $40,000 debt that they got during COVID, and most businesses haven't even recovered from that awful period of time because it lasted for, in some cases, 1, 2, and many times 3 years. I know personally of many businesses that never fully recovered due to all the changes and restrictions and the cost of goods going up to put them in a position where they either A, have gone defunct, or B, are working day and night just to keep afloat with their current businesses. Now, with all these things only recently being reported, and with everything changing, people spending their money, the net money received from new immigration just simply won't make up the difference that is going to be required. So what does this all mean? What this means at the end of the day is that the BOC is going to have to start cutting interest rates. And if they wait too long, it's going to have a serious negative impact in the marketplace. But for those wondering, what does this mean for me in real estate and mortgages? Well, we're starting to see some of the initial effects. However, I don't think it will last long. Just recently, the Financial Post reported, old news I might add, but the Financial Post reported that they're seeing for the first time in over 5 years, listings outpace buyers, which means we've headed to a more balanced market. You may have already noticed that the pace of house prices increasing for 2024 has slowed down, and although it hasn't declined, it stayed pretty steady, which leads me to believe that there are people out there who are just waiting, and in many situations waiting until they see some type of a rate dip. So for those savvy buyers in the marketplace, they're probably considering, why don't I jump in now when there's more inventory? But I think most people are waiting on the sidelines to see if there is going to be a significant dip due to all these insolvencies and debt, or to see when the Bank of Canada lowers rates so that they can feel confident about getting back in the marketplace. Now, I do believe when the Bank of Canada does lower rates, there will be a psychological impact for most people, which will mean essentially that there will be a rush to the marketplace, and we'll probably see that head back into a little bit more of a seller's market for the second half of 2024. But the question mark is, with these new capital gains rules and all the new rules in place when it comes to rental restrictions, especially in places like British Columbia, will the amount of listings go down, or will the increase in the amount of buyers just fuel the listings and we see a more balanced market for 2024? For those people who are questioning the desire for people to buy real estate and own real estate and expecting a crash, I think those people are probably out to lunch for a few reasons. One, it's proven really clearly that the cost of dirt itself has not gone down. If you actually look and analyze where the actual cost of real estate is going up and down, generally speaking, in many urban centers, if you're buying detached land or detached properties, those properties are still going up in value. And just yesterday, I was talking to a client who made an offer on a property that was appropriate and well priced for a small townhome in Vancouver that had 19 offers. The problem is there's not building enough of the correct type of housing for the people that are here. So for all the beginning of what I mentioned about people running out of money and people in a position that everything is costing them too much and potential job losses, the truth of the matter is we still have way too many people in our country and not enough supply and zero plan to fix all of that. So where that takes us at this point right now is we got a whole bunch of people sitting on the sidelines on YouTube, mashing their keyboards, getting angry at the marketplace, thinking that there's going to be a huge crash, and a whole bunch of people sitting and waiting for interest rates to come down because of the psychological impact of the BOC lowering rates and making them feel more confident and more free about house prices going up. You know, truly, I have no idea what's going to happen. I'm looking at the stats that are suggesting we still have an insane limited amount of supply, but I'm also seeing and hearing rumblings of people moving out of our country because it's too expensive to live in Canada and they're sick of the taxes. Either way you look at it right now, there's a mess going on and something is about to happen. We're about to hit a boiling point, and I don't know what that is, but I'm really curious to see where this goes. Ultimately, I think the biggest consideration is that most people are waiting for a rate dip to happen and thinking that it's going to get pushed out. I think it will happen sooner than later, and there's a lot of people out there, including the recent RBC report from an economist suggesting that June is the likely outcome of rates coming down. I'd like to know, what do you think about the recent job reports? Are they clouding over reality of what's happening in Canada? Do you expect things to fall off a cliff, or do you think this is a real key time to purchase real estate? I'd love to know. Leave it in the comments below and let me know.